This is AfroEconomics with J.B. Bryan. AfroEconomics is a strategic financial management program designed for the advancement of Black wealth in America and abroad.
Welcome to the Carl Nelson Show on Washington, D.C.'s 1450 WOL Radio and live around the world on WOLDCnews.com.
And thanks for joining us, folks. We hope you had a great weekend despite what's going on. Financial advisor J.B. Bryan is here. J.B., welcome back to WOL Radio.
It's good to be back. How are you, Carl?
We're doing okay. You know,
Great.
I guess when people ask you these days how you're doing, it's a real thing. It's
That's
not
right.
Asking, how are you doing?
I am well. I can't complain about a thing. I do everything I can to stay healthy, but yet I'm working harder and smarter than ever. But I exercise most of the days of the week, so that helps. Sleep, rest, eat well, and take care of your money so you don't stress, right?
Well, yeah, that's what we love to hear, too. You know,
That's
when
right.
I told someone that you were coming out over the weekend, they had a 401k that was just created, and they were thinking about shifting what's left into bonds. I said, please ask JB, what should I do?
I think they need to get a relationship with a financial advisor. If they don't have one, definitely consider joining AfroEconomics, and let's start doing some financial planning and set up an asset allocation that matches your long-term goals. I had a member just talk to me a few minutes ago, also with the federal government, and she said, a couple of weeks ago, I took everything out of the market. I had lost some money. I said, well, you really didn't lose any money until you made that move. And I said, why didn't you call me before you made that move? And she said, oh, well, I think I did. And I said, no, why are we talking today? And we didn't talk that day. And she said, oh, wow, I didn't really think about it. And, this is the time where we really have to think about what are we thinking about? Because she was calling me to add money to the stock market. So you're telling me that you just sold your positions in the stock market in your retirement account, but you want to buy more stocks with your extra money. I don't get it. You either are a long-term growth investor or you're not. She had a great stock exposure, a wonderful allocation, but really never made the connection that the funds that she was already in were in stocks. And all you're talking about now is just buying a couple of shares of stocks when you were much more diversified before you made that change. So we have to be very careful the money that we are accepting as a loss, because a paper loss, a paper saying that your value is down is not a loss until you sell at those prices that are lower than you want them to be. If you're in it for the long term, you really need to think about, what are you doing? What are you doing? Are you saying that it will never come up again? Like the stock market is never going to rebound? If you're saying that, then why are you talking about what to do next? Because if you're saying that the American economy is never going to recover, then you really don't need to worry about what's going to come next. I mean, think about all of the businesses that you were saying that will never, ever do well again. And I remember 20 years ago, people saying the same thing. 10 years after that, they were saying the same thing. It will never recover, because we have always had times where the stock market will be down. So you have to stay focused on what's real for you, is your specific goals. Do you need that money right now or within the next year or even in the next 2 years? Then maybe you should have had it allocated differently already going into this, because investing in stocks are for the long term, and bonds are not always, Carl, they're not guaranteed. So we would have to talk about what type of bonds are you in and what are you expecting to get from these bonds? What are you trying to accomplish? So that's why
Let me jump in and ask you this then.
Sure.
With the market going down, is this a time to invest in the market then?
Well, it's always, I don't know of a time when it's not time to invest in the stock market. And if you look at the market today, we are having an amazing day if you're looking at the Dow Jones. So, the Dow Jones just closed up 1,600 points. So anyone who, sold, say, a couple weeks ago on those most dramatic days is kind of thinking about, or sold all of their stock positions. What was I thinking? So is it time to get in? It could be the best opportunity for a person who is in it for 10 years, who wants to be a long-term investor, that's looking for a diversified equity portfolio that gives them long-term growth potential. It's always a good time for you to pick smart growth investments. Always, not just now, always. And it is amazing to me how aggressive our community can be when things are not in your favor. Like, it can be the worst stock market day in the world, and they will say, I think it's time for us to buy. Now, you're talking about people who most likely have never been in the market. So if they get in on this worst day and buy whatever it is that came up on some app, and it's down tomorrow, what do you think they're going to think? They're going to come right out. Now they've lost half of the money they just started with. So it's about getting to know your specific financial goals and making smart investments, not just because Bebe told you this is what you should be buying now and this is going to come back. And all of the inboxes and emails about smart investments are making me seriously disappointed with how easy it is to bamboozle us. We have got to start focusing on our long-term financial goals so that these short-term changes, now I'm talking about short-term, is 2 years. When you want to make money, you have to think in decades. What do you want, even generations? Of what are you trying to accomplish for the next generation? You don't think about what's happening right now. You think about always adding into smart value investments, always, consistently, throughout your life. Every time you make a dollar, 20% of that dollar should be going away for your future.
Amen. Let me ask you this. Speaking about the future, though, we've got these stimulus checks coming, and let's be real. Not everybody's going to get a check, $1,200, and people may say it's not much. But if you don't have a job and you're not working and you have no prospects of getting a job because the employment situation looks very bleak right now, your suggestions with that $1,200?
The person that is unemployed right now, unfortunately, may be a person that just doesn't want to get opportunity. Because just like you can say that it is a good time to buy stocks, you have to know that it's a good time to get a job also. Now, it might not be in your major. I remember one time this temp company sent this little girl to my office. And she had just graduated from college. And she said, financials, I'm a communications major. Financials, this is not my major. And I said, I wish you much success. And I wrote a letter to the company and I told them, this is not in her major. Send me someone that wants to make a living and build a career. Now, how she could not see, I was doing television then, I was doing radio then, what an opportunity it was to work with someone who is doing things in her major, but just doing it in a different way. Because then she would have listened and thought and found out, if she had listened, that I have a master's degree in communications, but I don't brag about it. It's not up on my wall, but look at what I do. So I don't think that you should really allow yourself, and this is for everybody out there listening, to not make money during this time. Now, I have people with doctorate degrees that are doing Instacart, Amazon, starting their own logistics business of delivering things on their own, like people with multiple degrees, because they know that there are opportunities to make money. If you're smart, you're smart. So I think that we need to adjust ourselves and start saying this is an opportunity to not be broke. You just have to focus on what do people need and how can I help them most during this time. But if you are going to allow yourself to not make any money right now, not unapologetically, I'm saying this. If you're going to allow yourself to be broke right now because you lost your job, then yes, you are in a crisis. And yes, you have an opportunity to get this little check from the government and try to figure out how you're going to make that work for all of these months ahead that this is going to last. And if you don't get to step in right now, everybody else is going to get your job. Everybody else is going to get your opportunity. I was reading an article today, and they were talking about how this pandemic is going to hit women most likely harder than any other people. Like, and there's only one other type of people, but women. And then you got to think about it. Black women.
Well, hang on a sec. Why women? Why would it hit women harder?
They closed the daycare. They closed the school. They close down. We're more likely to be the custodial parent. We're more likely to have to take care of the child, and these things, and we're more likely to be in a service.
Hang on a second, JB. We got to take a short break here. We got to check the traffic and weather in the D.C. area. Folks, you want to join our conversation with JB Bryan? She's a financial advisor. You got questions about money? Reach out to us at 800-450-7876. We'll take your calls after the short break right here on 1450 WOL, where information is power.
I'm J.B. Bryan, the creator of AfroEconomics, a strategic financial empowerment program based on 10 timeless financial principles like generational wealth and legacy, financial knowledge, credit confidence, entrepreneurship, self-reliance, and more. AfroEconomics gives you the guidance and tools you can use to develop and sustain wealth. Check out AfroEconomics on your favorite social media platforms. You will find us everywhere. Plus, enjoy my weekly AfroEconomics podcast. There are many levels of AfroEconomics membership, including the free online access membership level called No Excuses. So make no excuses and check out AfroEconomics.com today. Powered by J.B. Bryan Financial Group, Incorporated, a registered investment advisory firm. #AfroEconomics.
And now back to the Carl Nelson Show on Washington, D.C.'s 1450 WOL Radio.
And thanks for staying with us, folks. I guess he's financial advisor. Her name is J.B. Bryan. The number to call, speak to J.B. is 800-450-7876. JB, I just saw you on the Zoom there. Folks have been asking me what you look like. You got a fan club out here. As soon as you come on, they're telling me they're just in love with your voice. But I tell them that you're just as smart as well as attractive. So
thank you.
Before you go back and tell us about why women are more impacted by this economic downturn, tell people how they can watch you on this Zoom.
Definitely go to AfroEconomics.com to the events calendar, and I have free webinars for you to ask all of the questions that you would want. And also there is a free membership. We have members only meetings on Friday mornings via Zoom, and Wednesday nights and Sunday mornings I do webinars. And I'm telling you, I have been doing this, haven't I, Carl, since before it was cool. Look, Zoom, look, should thank me. Look, I was ready for them. I remember no. I'm not telling the truth. It was 10 years ago or more. I did a company called WebEx, and they were doing the same concept as Zoom, and it was $600 a month. And I did it for a couple of months, and I was like, look, y'all, this is a great idea, but I can't do it. And then it came back. Then he started with the GoToMeeting and all of this. So, and affordability, right? But I guess I say that to say that technology, unfortunately, is a business that a lot of women, we're not in. And I guess, because it is rare, even in like financial services or all of these different industries that are continuing to operate, most women, it's not dominated by women. The industries that are dominated by women typically are service industries. They're more likely to be a waitress that's out of work. They're more likely to work at the daycare, or work at things that serve and help people, and now we can't do those things. So there's the research is suggesting that women will be the hardest hit because of the custody of the children and also the career opportunities that we select. And now they're saying the wage gap between men and women, not to even add on black women, but just men and women in general. They're saying that women make about 98 cents on the dollar of men. So that means that over a career, men are making about $100,000 more, than a woman in the same career when they do that example. And that's one way of looking at it, is that we are making less money. And with this pandemic, it is estimated that it will take about 200 years before the wage gap between men and women will be closed. And then think about the impact that this could have on our black wealth gap that I have spent my entire career to close. And if we do the wrong thing now and start wasting our money and taking advantage of some of the things that they've made available to you, like not paying your mortgage and not paying your school loan. And if you have the money, we must pay those debts because they will get the money. See, when you're talking about government debt, they are going to get that money, so they don't worry about it. The government, you cannot file bankruptcy and not pay them.
You're saying all these breaks are there telling us that we're going to give you a forbearance like for 3 months. You don't have to pay your mortgage. At some point, you got to pay that money.
You're going to have to pay it. Yes. And so we have to be very careful and look at the incentive behind it. Now, this is what I've been thinking about, Carl. They are now allowing you to take out up to $100,000 out of your retirement account without a penalty, even if you're under 59 and a half. So this is definitely the best way for them to stimulate the economy. Do you see it? It's all about keeping corporate America with the cash flow, keeping this economy moving. So they're basically, the government has given you the opportunity to ruin your financial future in exchange for making sure.
So what are you saying? We shouldn't take advantage of these breaks then?
You better not. You better not, unless you are broken. I'm telling you, would be better off moving back in with your mother. And you've got to make those type of smart moves instead of sacrificing your retirement. And taking that money out, you should be moving back home, moving together, doing everything that you can to protect and not spend your money. Because this, first of all, you're selling out at what could be the bottom of the market. So you're selling out at lower prices, pulling out this money, and then what? They get taxed on it. It's still taxable income. They're just giving up that penalty. But hey, $1 now is way better than $1 after 59 and a half. They're like, if we can get them to take it out now, we still will come out ahead than even charging that penalty, because we're getting money that we may not have ever got, or like it could have taken them 20, 30 years to get that money because you would have waited to spend it. So we have to be very careful at things that like this is glittering to so many people. But if I could say anything from the rooftops and scream it with a megaphone, that you have worked too hard to save for your future, to take that money out now. I don't care how much time they say that they give you to pay it back. It is really hard to ever put money back in that account.
Hang on a second.
Yes.
People want to talk to you.
Yes.
800-450-7876, and you can see her on, you've got that Zoom contraption, if you will. You'll see her right there, because folks keep asking me what you look like. I guess the sound of a woman talking about making money is really, really attractive. Anyway, Mentu's on line 2. He's calling from New York City. Mentu, you're on with J.B. Bryan.
Yes, and I second that emotion. It is attractive.
Oh, thank you.
Question, a couple of questions, but I'll just give one at a time, and then if time permits, we'll go on. One is investment club. I know back in the 90s they were very popular. Is that a good thing for today's economy to get in, especially for people who might be starting off for the first time or starting from a rebound from a bad economic hit?
In the 90s, it's funny you mentioned that, my brother. In the 90s, I was featured along with my investment club that I had started. They were featured, and then they asked, like, who's your broker? And we were in, like, the Black Enterprise magazine or Ebony, one of those. I should find that picture. But they came in my office and took all these pictures, and investment clubs were hot. And one thing that I noticed, and I realized, and I have to say this not to be pessimistic, but it is a really hard way to make money. Like, I think they're a great opportunity for, like, education and everything, but I often wondered, like, why people just didn't do a mutual fund or something, or like now we have exchange traded funds that have a whole bunch of, like, if the investment club, if the point is to diversify, and pool money together so you can buy a lot of things, then there are investment options that for an individual to do if you get into a club that it feels like it's slowing you down. And that's what I saw, like a lot of frustration, and then people wanted money out, and then they didn't want to close out, and people had to put money in to buy the other people out because they needed the money. And then you get all caught up into other people's financial goals. So as an individual investment advisor, I feel that if I were just looking out for you, I'd say, no, I can make your life a lot easier. These are some things that you should do. But from a social perspective, or like if it were a family putting together to do some things, I do think it would be good for our community to start doing more things about uniting and education and empowering ourselves. So from that perspective, it is good. But when you bring in like a lot of strangers and people with different backgrounds and different interests, it can be complicated. So if you have a common goal and a common culture and a common mindset, it's probably a lot easier.
I feel you on that one.
Mm-hmm.
The next thing is, next question is, has enough dust settled for us to know what the reset corona economy is going to look like? Or we're still having to wait to see what opportunities are there and what direction we need to leverage in order to obtain some wealth.
Because I feel that it's impossible for us to know, because I always feel like there's another shoe that's going to drop. Like it's like something else is going to happen. Or, everything is so fragile right now that any numbers that are released on the news or any tweet or false move, so that it's so off balance that I think that we need now more than ever to just focus on, if I have time for my money to grow, then I can get involved in these investments that have long-term growth potential, but also can be volatile over short periods of time. If not, then there's a lot of investments that are available for security. And I think sometimes we make things way more complicated than they have to be. Because the bottom line is, what are you investing for? Like, what are you trying to accomplish? And make sure that you do that only with things that you understand and you feel comfortable with. No matter how exciting it looks, no matter how good it sounds, make sure that you see all the fine print. Who are you talking to? Are they licensed? Where is my account? What type of insurance does it have? Is it SIPC? FDIC, all of these different, you need to really know.
JB, we got to take another short break with us, and stay with us, man, too, if you have a follow-up question. Folks, you too can join our conversation with JB Bryan. She's a financial advisor. Reach out to us at 800-450-7876. We'll take your calls after the short break right here on WOL, where information is power.
I'm J.B. Bryan, the creator of AfroEconomics, a strategic financial empowerment program based on 10 timeless financial principles like generational wealth and legacy, financial knowledge, credit confidence, entrepreneurship, self-reliance, and more. AfroEconomics gives you the guidance and tools you can use to develop and sustain wealth. Check out AfroEconomics on your favorite social media platforms. You will find us everywhere. Plus, enjoy my weekly AfroEconomics podcast. There are many levels of AfroEconomics membership, including the free online access membership level called No Excuses. So make no excuses and check out AfroEconomics.com today. Powered by J.B. Bryan Financial Group, Incorporated, a registered investment advisory firm. #AfroEconomics.
Follow us on Instagram at WOLDC News. And now back to the Carl Nelson Show on Washington, D.C.'s 1450 WOL Radio.
Thanks for staying with us, folks. Our guest is financial advisor J.B. Bryan. If you got questions about money, how to make money, how to save money, how to keep money, she's the lady you need to talk to. The number to call, speak to her, is 800-450-7876. And she's also on that Zoom setup as well, so you can see a picture of her as well. Mantu is reaching out to us from New York. And J.B., you're responding to Mantu's question, so I'll let you finish that. He may have a follow-up.
Thank you. I was going on and on and on, but I was simply, my main point is to say that be careful where you invest your money during these times, because a lot of money can be lost. And it's just a fragile situation when there's so much information coming at you. So be careful who you're talking to, and consider even the free membership of AfroEconomics. It's not a product. It's just a service for financial empowerment. It's just, information-based and helping you adjust your financial plans and goals. So you can just be empowered. And I think a lot of times we're just being sold things instead of being serviced and served and just helped with what is important to you, because a lot of times people have what they want you to have, but that's not necessarily what you need to have for you and your family. So just be careful, be empowered, and great questions, my friend.
Yes, and the last two, and I'll wrap it up, and I appreciate the time. One is social responsible investing a myth due to the fact that everything's interconnected, or is there, I know there's going to be a lower rate of return, but is it possible for those people who have great concerns about certain industries that they want to avoid, that they can still be invested in the market, and then is indexing still a strategy?
Thank you. That's great. He spoke about social responsibility investing, and there are actually, I think the best way to invest socially responsible is to create your own, because there are like if you Google social responsible investments, there are a lot of ETFs that we could invest in, but each of them have their different definition of what socially responsible is. Like I have a portfolio called my AfroEconomics 10. That's on my value system of what companies I feel have done well and have done well by our community. But but you can look at the same portfolio and say, oh, I don't like that company. My cousin worked there, and that's horrible. So I think that if you do want to be socially responsible in your investing, you do not have to sacrifice return. Because some of them, even the ones that are out there, have done really well. And by some definitions, even major companies, are considered socially responsible. Remember, it just depends on what's important to you. And then you had asked about index investing. I think there's still room for taking advantage of index investing and even using a combination. I like to use a combination of index ETFs and for my portfolios. So definitely there's a place for that. And there's, a way that you can actually reduce your expenses. And then historically, investments that aren't in index, that are actively managed, really haven't done that much better. So I try to take the inexpensive indexes, put them together based on your risk tolerance to reduce your expense ratio inside your portfolio. So I think there's definitely room for index investments, just picking the right ones for you.
I got a couple of tweets for you, JB. Please ask your guests to talk about the grants available to small businesses that do not have to be repaid. And it says these funds are made available in some jurisdictions, not all. Are you familiar with that part of the bailout?
I see. Last week they were really pushing that payroll, but it came up as a loan. It kind of introduced that. But it definitely said payroll loan. The interest rate was very low, and it's based on the payroll. But I really think that as small Black businesses, you need to be very careful what you put on that application. So let's just say you do an application and you put down that your payroll is a particular size because you're trying to get a particular loan or grant, and that you have not been paying payroll taxes on that size of a payroll. You feel me, Carl?
Yeah.
You're going to get it.
Where are you going?
You're going to get it. I had an employee one time, and she was filing for unemployment in New Jersey and working for me in Virginia. And then something happened, and she was getting disability. She was getting disability from me, and they said she couldn't come back to work, so she filed for unemployment. And they asked her, when did she start working for my firm? And she put down when she started working for my firm. And they said, Miss Bryan, we need you to get off the phone because we have a problem with her with the state of New Jersey. And they were ticked that she was. So whatever you put down on paper, you're talking about the government. Be very careful what you put down and make sure that you can back it up. You better back it up because payroll taxes have put people out of business. So don't get a loan, don't get a grant based on anything, but that's not a legitimate concern. And then I feel like we need to be careful on getting especially loans. Now, I don't, know about any grant of any substantial size that's going to keep any business in business. So if they got a grant and it's $1,000, you might as well wait on your, personal $1,200 so you're going to get it. But your business, the ones that really are going to help a business stay in business, it's going to be a loan and it's going to have to be paid back. And you have to be ready to pay that back. And they're trying to make sure that you keep that payroll, because if you keep that payroll, then they're not on their payroll. They're not on unemployment. So you've been paying into unemployment insurance so that they can draw unemployment. But yet but now they're saying, well, we don't want them to draw unemployment. We want you to get another loan to pay that payroll and take your people back. But you can't open your business. So be very careful about what you do. If it's not logical and it's not something that you can really keep, the commitment to getting, the grant or the loan is something. They want something in exchange for. Nobody is giving away anything. Many grants, you have to do a certain amount of programs or or reporting or giving information on what you're doing. So you have to meet this criteria. People have gone to jail for not meeting the criteria for grant programs that they've received. So this is serious.
Yeah, it is. Yeah. I got some more folks who want to talk to you. 800-450-7876 on line 2. Tillman's calling us from D.C. Tillman, you're on with J.B. Bryan.
Yes, finally we get to speak. Ms. Bryan, I've been listening to you for years. I was very impressed by your website when I went on.
Thank you.
And my case is peculiar, I guess almost as peculiar as the virus crisis. Senior citizen, age 77, not looking for any long-range program. But I just would like to see, speaking of social, what it feels like. I'll say if I had one share of IBM, one share of Microsoft, that kind of thing, just something. Now, I saw a form on your website that let people write in, indicate what it is they're looking for, what it is they hope to attain, how much risk they're willing to take, and so forth, and then that there would be some suggestion as to what sort of fund they would want. So if I were to do that, if I were to just say, fill out that form and send a sum, 100,000, whatever, to you, and say, set me up something,
Is that something your firm does? How much would that cost me?
Oh, that wouldn't cost you anything, but that is a key part of the AfroEconomics financial planning membership. But that particular click that you hit off the website was in the that set up an investment portfolio. And you clicked in and it's kind of going straight through to set it up, and it starts asking you questions about your risk analysis. It's just about trying to meet people. But what I don't like about it is it doesn't allow me to ask you for your phone number. So it's better if you just do where it says contact or in my chat and just say, I would like to talk to JB Bryan, and we can do that. But yes, I am licensed, so I'm very heavy regulated. Right. So they will not allow us.
Impressed by that too.
Yeah.
I was very impressed by that.
Oh, thank you. But it has its challenges, and I'm being listened to, I'm sure, right now. And and we have to acknowledge that is the kind of people that we should be doing business with. I have to, everything, because I'm a registered investment advisory firm, when you're my client, it says I have to do what's in your best interest, not in my best interest. And that's the way we should. The Obama administration had decided that anybody having a retirement account should be working with an investment advisor. But at the same time as that was being changed over, Trump came into the White House and his administration said that's way too much regulation. And they had convinced him that small investors would be hurt by having investment advisors looking out for them. And it is, but that's not,
right there, JB, and stay with us, Tillman. We got to take a short break, JB. Stay with us, Tillman, because in case you have a follow-up, we got some more people who want to talk to you. We got some tweets as well. You want to join in on this conversation, reach out to us at 800-450-7876 to speak to JB. We'll take your calls after the short break right here on 1450 WOL, where information is power.
I'm JB Bryan, the creator of AfroEconomics, a strategic financial empowerment program based on 10 timeless financial principles like generational wealth and legacy, financial knowledge, credit confidence, entrepreneurship, self-reliance, and more. AfroEconomics gives you the guidance and tools you can use to develop and sustain wealth. Check out AfroEconomics on your favorite social media platforms. You will find us everywhere. Plus, enjoy my weekly AfroEconomics podcast. There are many levels of AfroEconomics membership, including the free online access membership level called No Excuses. So make no excuses and check out AfroEconomics.com today. Powered by JB Bryan Financial Group, Incorporated, a registered investment advisory firm. Hashtag AfroEconomics.
1450 WOL. And now back to the Carl Nelson Show on Washington, D.C.'s 1450 WOL Radio.
Thanks for staying with us, folks. Our guest is financial advisor J.B. Bryan. If you've got questions about money, how to make money, save money, keep money, this is the lady you need to talk to. The number to reach her is 800-450-7876. Those who want to know what she looks like. I'm getting a lot of compliments for you, J.B. I'll just pass them on. She's got the Zoom set up, and you can go online and you can see her, what she looks like. Let's go back to J.B. and Tillman is in D.C. So, J.B., I'm going to let you finish your response to Tillman. We've got some other folks in tweets who want to talk to you as well.
How you doing, Tillman?
Yes. I was thinking that I mentioned that I didn't have any specific for myself, but I'm interested in kind of guiding my family members, those others, into doing things like this in their younger years. And I think it would be a benefit to them, and it would also help me a lot because I've always wondered what it would be like to be an investor when you have competent advice leading you, and you don't have to be worried about who was that I was talking to.
And you sound very successful. So that's just evidence that...
Sitting home wondering what tomorrow will be. It's
that's
kind
right.
of like... But
that's great.
Somebody suggested that there's a redistribution of wealth going on. And nobody knows who tomorrow the top 5 may be. We don't know.
And it depends on what your definition of wealth is. because I think that this is the time for us to start creating our own businesses. And there's no better investment than investing in your own business. Wall Street is us investing in other people's businesses. That's what that is. You start your own business, especially if you start a corporation. You're the sole shareholder of the shares of stock of your corporation. You pass on to the next generation those shares of stock. And we don't really think about how you can pass on ownership of your business and allow them to walk in and be born and start their careers with something, with wealth. And I believe that that is the reason that the wealth gap is so large. In addition to the discrimination that we have experienced, it is the inability to build our own businesses consistently over generations has kept that gap there. Because there's so many more advantages for us now to start businesses. You will never ever be unemployed. I can tell you that as an entrepreneur, I've been an entrepreneur all of my adult life. Basically, I started my business in my 20s. I was a stockbroker, left them, started my own firm. And since then, I have been taking care of myself and my staff and helping people build wealth. And I have always focused on the Black investor. If we make a commitment that I am not ever too good to do anything, we will always be okay. But when we start saying, I'm not going to do that, I can't do that, I'm not going to, that's not good enough, it doesn't end, what about this or what about that, you can build up all the negativity. So the best investment, I have to reiterate, is in our own businesses, especially at this time. I feel that this is our year for accomplishment. This is our year for no excuses. This is not our year for looking for some other scandalous thing they're sending into your inbox about somebody else's currency that we don't know anything about, throwing away our money, and some it's not regulated. They're not licensed. We don't know who they are. They're popping up this idea. You'd be better off just buying some masks and reselling them. Anything. Just do business. We should never be broke. Never be broke if you look at yourself as an enterprise. And then Carl was saying about being attractive. Now, there's some sort of disconnect in our community that we think that working hard is going to pull away from the way we present ourselves or how we look or our health. Now, I have worked hard. I have not had a vacation in years. I have worked every day of 2020, unapologetically. No trips, no fancy car, no nothing. That's the sacrifice that it takes to build a business. That not one thing as an entrepreneur, to me, in my opinion, is given to a Black woman because of what she looks like. If anything, it has definitely never worked to my advantage. It just doesn't. It doesn't help anybody give you their life savings, you know what I mean, because of what you look like. And, so that's just a blessing from God, but also can be your challenge if you believe that somehow you look too good so you can't be there, the one that's cleaning the toilet or cleaning up the office or answering the phone. And sometimes when I answer my phone at my office, people go, why are you answering the phone? I'm like, it's my phone. Why would I not answer my phone? Why would I not take out my trash? Why would I not clean my toilet? Right?
When are you next lecturing in the Washington, D.C. area?
Oh, all the time. I have an office, on 12th Street, 700 12th Street. Yes, indeed. But, of course, we're doing our social distancing, so we'll have to have our video. But I'm right there. I have an office right there.
All right. Thank you.
I'll tell you what, Tillman, we'll give out all this information before she leaves because we've got some other folks who want to talk to me. We've got some tweeters, too.
Thank you.
But I thank you, Tillman, for your call.
Thank you.
800-450-7876. Tweeter says, how does your guest think post-coronavirus economy will look like? Will capitalism take a hit big enough to cause a global reset? to the point where the entire world becomes more connected and eventually socialistic, or does capitalism somehow survive and we turn back the clock and get back to the plantation, in quotations, where the 1% are the only ones that accumulate real wealth? A long question, but I hope you got it.
That's right. That's right. It doesn't really matter what name they call it. Even if we became a socialist economy, we would still have rich people. I don't understand how that happens, but like there's always rich people and there's poor people. No matter how wonderful they think that their country is, there's people who have and then people who don't have. So one good thing about capitalism is that if you participate and start your own business, you will appreciate the need for capitalism. Just meaning building capital, building a business, building wealth, I think that the worst thing that can happen is that we have a group of people who don't have anything. Because when people don't have anything to lose, they will not participate in making the world a better place. And we're not those people. So we need to just accept that it's about enterprising. It's about creating our own wealth. It's about, I don't care how much, I don't care how rich you are. I'm going to get rich too. I'm going to develop wealth. I'm going to make this a better world for the next generation of Black people. That's what you have to be committed to. And in order to do that, we have to have excellence and we have to learn to succeed in this environment. And that is, to me, entrepreneurship. And it doesn't matter what you do it well. That you don't have to groom this next generation of they have to go and figure out how to get a job. Because if there's anything that we can see is that every campus is talking about entrepreneurship. I was just about next week going to a college campus for an entrepreneurship panel. We're just catching on. My alma mater, a majority white school, has been doing social entrepreneurship, this type of entrepreneur, all these different entrepreneurs talking about angel investing and trying to get alumni to come back and sit on panels and talk about the students with their ideas about starting their businesses. That's where we are going. That's where I want us to be.
All right, cool. Because we got a bunch of folks still want to talk to you. 800-450-7876. Go to Houston. Jimmy's waiting for us. He's on line 3. Jimmy, you're on with JB.
Hey, how you doing, Carl? How you doing, JB?
Hey, good to hear you.
All righty. I have a question. I have a TSP account, and I was wondering, in these days and times, should I raise up my percentage? Because what I did is because my son turned 26 this year, right?
Okay.
And so I moved my thing to self-only. So $249 that I was paying at first.
For his insurance, okay. Mm-hmm.
Right, went down to $113. So I was wondering, should I just adjust that or finish paying off? Because I see how powerful this TSP is, because I actually kind of borrowed from it to pay my debt on my credit cards, right? So I left a little balance that's still there. So I was wondering, should I just take the money that now that I'm finna save from the health thing and just finish paying off that credit card, or raise my percentage up? And the other question was,
let me get in on that one. That was a bad move to take your retirement to pay off a credit card. I want you in.
Before you answer that, JB, and by me doing that, I ain't gonna lie, it made it raised. I got my credit score up to 819.
And then what you gonna do? Go into more debt?
No, I was gonna ask you how can you help me with having an 800 and something credit score? But answer that, because I got another question.
Okay. But I know, and look at that. If you think about it, that's how the system works. So it makes you feel like, okay, my future doesn't matter because y'all, you have this great score. And then now, what do you use the score for? Like especially after you get over 800, like what? That's just because it makes you feel more comfortable going into more debt. Like if you're going to take the loan out, you should have no more credit card debt. But it's just bad because it slows down your accumulation for your future, because you're taking the money that you could be using for saving, that's got to go to pay that loan payment. If you don't have that job, if you lose that job, then you'll have that as a taxable event, because they're going to want that paid back immediately. But so it's not the best idea. I would have said, wait, your son's going to be off and you can put extra payments onto that credit card bill, but it wouldn't have given you that immediate satisfaction like paying off that loan is. But when you take the loan and then paying it off, but it also the danger there is that you'll put more money on the card when you have more money available to you, unfortunately. Jimmy, what do you think about that? That you have to make sure that you don't add any more money to that credit card now that you paid it down, using the work account, and you have great credit. And I'm just picking on you a little, but I'm proud.
Thank you. I actually, only thing I do, I just use my American Express that I pay at the end of the month.
Great.
To not get in that danger, because I've been suffering for this here with my debt to ratio for a long time. That what kept my credit score low. So going into the new years, I made that move. All this happened within these 3 months. After I got kind of debt free going into the new year's, my son turned 26, and then all this here. So
it takes a time, doesn't it? It takes a time, but you did it. You did it.
And it's been over 20. So I didn't know I could borrow like that. But my thing is and what I'm doing now, Tim, is just good. With my American Express, I've been actually helping a couple of family members to kind of help get their credit score. I know there's some things I don't recommend all people to do that, but I'm just kind of bold. I kind of help my family members to get that, to be a card holder so they can up their credit score with the gold card, to kind of help them on that.
And you just have to be very careful with that if they consider you a co-signer on that. As long as it's, your children it's just really difficult to ever be a co-signer for anyone. And, just be very careful with that and make sure that the limit is small and get yourself off as soon as possible. Because that's a very dangerous, that's probably like in the top 2 things to never do. Co-sign.
Okay.
Never.
Okay.
Yeah, but you're a good person.
Well, hang on a second. JB, that goes for family as well?
Yes, that goes for family especially. Those are the only ones that are going to ask you. Like, be very careful. I mean, think about it. People go through a divorce. So that's family. And then now you've been co-signing on everything. I feel that married people should be living off one household income, because anything could change. You could have a child and the other person that doesn't want to work. You have, you need someone that's going to have to change their career because of childbearing. We see that this pandemic is going to impact the custodial parents a great deal. So things change so quickly. We have to be careful. And they're not going to increase your child support payment because of, the child is with you 24/7 now. You're still getting the same amount and you can't work. That's a problem for, mostly women. And sign up for AfroEconomics, sisters, and let's start working this through and figure out what you can do as your own enterprise and work this out. No, because we can do this together. You can get through this.
Yeah, I got to cut you guys, but JB, the next time we talk, we should talk a little bit about credit.
Yes.
People just tweeting, everybody's tweeting because they're just amazed that Jimmy has an 800 credit score, and some people are saying, what good does it do?
That's right.
They're going all different directions. But
we're going to do it.
Can I just say this real quick? Just to,
Go ahead, Jimmy.
Now, I recommend guys, I did this way back in the past, is really, like you say, really work on becoming an LLC, because as far as yourself, getting your credit up to get your credit line, because back in the past, like when I owed it back, I actually put it on my credit card to save my interest. Then, that's one thing I did do. But I just wanted to add, JBL, one thing. I had $10,000 sitting over in an account just kind of sitting there. I was going to dump it in my TSP. Is that a great thing to do at this time with it being low like that?
You were going to add money to your TSP from a savings account?
Yeah, from a little account that just kind of sit over there that's kind of safe.
Yeah, just increase what you're doing every month. They won't allow you to do it all at one time, but they may allow you to pay it towards that loan payment, though. You could do that, or you could, add it through the TSP gradually over the next couple of months, and then you could reduce it back down, your payroll contribution back down if you need to. But I feel that everybody out there that works for someone should be putting away 20% of your income, because you don't have the right to just go out there and work for someone and think that you're always going to have that job. You need to be putting away 20%, even more. But we could learn to live off half of our after-tax income. You know how well you'd be doing as far as savings and emergency funds? We would not be worried about this at all. You would have like a whole year of savings available.
Yeah, let's park that for another discussion, because we didn't even get into the fact about the banks. Some banks are restricting how much money you can pull out now since this virus started, and so we need you to help us out on that. Jimmy, I thank you for your call. Congratulations on having such a great credit score. JB, how can folks reach you real quick?
Please call me 1-844-JB-Bryan. That's 1-844-522-7926. Google my name, JB Bryan, or Google AfroEconomics, and take advantage of the free membership. I would love to talk more with you. Thank you. Thank you for the opportunity, Carl.
All right, thank you, JB. And for the folks who didn't get a chance to call in, please check with her. Or next time you hear her on the radio, just call in early so she can get your questions in. It's all for free.
That's right.
Folks, now, thank you, JB.
Today's podcast was powered by JB Bryan Financial Group, a registered investment advisory firm and the home of AfroEconomics in Virginia, Maryland, Washington, D.C., and New York.